Hey guys, welcome back. My name is Steve. I'm actually a realtor in the Los Angeles County, San Gabriel Valley, also servicing part of the San Bernardino County as well too. So, hey, listen, a couple of weeks back I actually had an opportunity to interview a direct lender by the name of Javier Suarez. And today I actually had an opportunity to interview Luis, who is a mortgage broker. So there is a difference between the two, and I've had some people reach out and just kind of ask like what's the difference and if I could do another video on that. So I thought I'd do that today. I had the opportunity to interview Luis, and he's going to explain a couple of things as far as the differences, try to keep it simple and precise for you guys, not too much, but if you like what you see and you like what you're hearing, subscribe down below. That would be awesome. Anyhow, let's get started. Hey guys, so welcome back. Like I said earlier, today we have a special guest. I have Luis Egas here with me. He is a mortgage broker here in the office. Last time I had Javier Suarez, and he's actually a mortgage lender, and he's actually the broker owner of the location as well too. So I thought it'd be great to have the two, and kind of we can go over the difference between what a broker does in the lending aspect and what a direct lender does. So now we're going to have Luis talk about it. So thanks, Luis, for coming by this morning. I appreciate your time, or this afternoon. And I'm just going to let him kind of discuss some things, kind of provide some value for you guys. So take it away, dude.
Hi, everyone. Thanks for having me, Steve. So I just wanted to give you guys a little bit of a contrast from the direct lender aspect to the mortgage broker aspect, okay? So like Javier, like you mentioned Javier, he works with a direct lender. And basically, that's the only lender that he works with. A direct lender, they lend their own money, their own financing, and they have very good systems. It's a very good option, right? Yeah. Direct lending, but all it is just that lender. Gotcha. As opposed to myself, for example, I'm a mortgage broker where I can shop the loan around. So just like you would shop your, car insurance or your homeowner's insurance, right? Yeah. You shop it. You look for the best rate with the best company, and you get the best policy, right? So that's what I do, except I do with mortgages as opposed to car insurance or homeowners insurance, right? So I have access to many lenders that I can choose from depending on the borrower, right? So every situation is unique, right? When it comes to people's credit scores, people's financial situation, people's job situation. Not everyone is a cookie cutter type of borrower. For example, like some people have a regular job where they get a W-2, they get their pay stubs, and they do their taxes, and that's pretty much it, right? As opposed to myself, as opposed to someone who is like self-employed. Well, like myself, I'm self-employed.
You are
as well. So we don't get a W-2. We don't get pay stubs, right? We make our money and we do our taxes, right? So some of these lenders have programs, have options for those type of borrowers, right? Creative type of programs. Now, the interest rates are not going to be the best. They're going to be a little bit higher because of the fact that those programs are considered like non-QM, non-traditional programs, and they're considered a little more risky for the lenders, so they hit you a little bit on the rate. They're a little bit higher, as opposed to your cookie cutter traditional borrower, right? And so I'll give you one example of those type of programs. Like for a self-employed borrower, they have what's called a bank statement program, where they look at 12 months of the borrower's bank statements and they look at all the deposits,
Okay.
right, from his work,
Mhm.
because it could vary, right, from month to month. It's not going to be the same for some people.
Oh, yeah.
So they add up all the deposits, they average them out over 1 year, and then whatever that number is, that's your income.
Gotcha.
Okay, so that's what they use to qualify you.
Okay.
And so that's one of the options available. So there's different types of programs available depending on the borrower.
So would you guys work with like VA and first-time home buyers?
They have that available as well. VA, of course, everyone wants to come in with the lowest down payment, right?
Of course.
And some people might not have the best credit score. They have some dings, some past history that's a little bit hurts their score. There's lenders that can work with that. VA, FHA. FHA is 3.5% down.
Mm-hmm.
That's government
Mm-hmm.
programs. Veteran Affairs, VA, they do 100% financing for veterans, and the rates are pretty good, right? And those vary from lender to lender as well,
Okay.
because each lender may adjust the rate depending on the situation,
Gotcha.
right? So there's many options on the broker side of things. Also, to the interest rates, a little bit about the rates. These lenders that I use are wholesale lenders, so they're, as opposed to your traditional Chase Bank, B of A, Wells Fargo, these are retail lenders, right?
Okay.
So they offer retail interest rates.
Gotcha.
So those interest rates are going to be higher than wholesale lenders, which are going to give you wholesale interest rates. Just like you would go to the manufacturer to buy something, you would get it at their cost, right? Most
Yeah.
likely, or a little bit above that, just so they can make a little bit of money,
Mhm.
right? As opposed to going to a third party, right? What's going to happen?
Yeah.
It's going to be more pricey because they're going to add their fees and their costs and their expenses and whatnot. So you're going to get a higher price. So wholesale lenders, better interest rates as well. That's another
Gotcha.
benefit to using wholesale lenders on the broker side.
Okay.
But again, nothing wrong with the direct lender, just the different options available depending on the borrower.
Cool.
Right?
Yeah. So, if there's one thing you could leave everybody with right now, what would be the one thing that you would tell them?
I would say it's very important, guys, to look at your credit every now and again, once a year, once every 6 months. Run your credit, run your report. I do what's called a tri-merge credit report, which I run it with all 3 credit bureaus: Equifax, Experian, and TransUnion. Those are the 3 major credit companies.
Yeah.
And each one will give you a credit score, and that's what the lenders use. They do a tri-merge credit report. And a lot of people, sometimes what happens is it's time to buy a home, and they run their credit, and they didn't know they had. They have things from the past that they didn't know they had.
Yeah.
A collection that snuck up on them.
Yeah.
Some kind of gremlin that could come back to bite you,
Gotcha.
right? When it's time to buy. Had you known about that sooner, you could have repaired it somehow.
Yeah,
You could have
that's true.
paid
That's true.
a collection off and wait, and then a couple months would have passed and it would have washed off.
Yeah.
But now you want to buy a house next month. Now you have this collection that's not going to wash off right away.
Yeah.
When you take care of it. So that's the thing that I recommend to everybody is run your credit score, run your tri-merge report at least once a year. That way you know what's on there. Also, fraud. There could be fraud. Somebody could have done something with your credit and hurt it in some way.
Yeah.
So always be on top of that. Look at it. Make sure the accounts that show on there are truly your accounts and they look right how they should look. Because if there is a mistake, you have ways to correct it.
Yeah.
Right? You gotta get on the phone.
You want to get on top of it before you actually get to that point where you're trying to buy a house and you find out you can't buy a house because you've never ran your credit before, and now you have all these things that somebody had been doing on the side, and just your dream becomes a nightmare at that point. So
Yes, sir.
but
So-
so thank you, Luis. So basically, in a nutshell, guys, what you want to do is give yourself some options, talk to different lenders, reach out, talk to different agents, always get at least 2 to 3 opinions, and like Luis said, run your credit, check it. I believe, if I'm correct, every year you can run the 3 bureaus one time a year for free. So I personally check mine through each bureau every quarter. So I'll do it through Equifax and then the other two throughout the year.
Experian.
Yeah, so
Experian and
I'll do it 3
TransUnion.
times throughout the year. So just some good things to do, regardless if you're buying a house or not buying a house or anything, just to stay on it. So thank you again, Luis, for coming by. I appreciate it. Thank you guys.